Is my screen visible? Is my screen visible?
Yes.
Okay.
Yeah, yeah.
Thank you. So, Pundir will remember when we were young, we used to have
Yeah.
this song, "Don't Worry, Be Happy," right? So, with the with so much of this is that Bobby McFerrin song, around 30 odd years back, right? And I read so much of worries on the group about the market valuations and all. So I thought, let's say, remember that song, "Don't Worry, Be Happy," right? So if you see the market setup, the GDP growth for April-June quarter is at 7.8% year on year. Uh, the concerns are on weak monsoons, higher food inflation, likely slowdown in government capex, sluggish global growth, uh, is signaling that there may be a slowdown in domestic demand going forward. But if you see the India's PMI, Purchasing Managers Index for manufacturing, has come at 58.6. That's very good. And if you see all the narrative, India remains an attractive investment destination. So the GDP numbers, what they highlight is that there is a strong momentum in the economy. The robust PMI shows that manufacturing will provide a strong contribution to the second half of the year economic growth. So if today the people are very enthusiastic, it means they have got orders. There is a lot of work going on. So next half of the year would also be equally good or better. That is the interpretation of a robust PMI. And please remember the services PMI would be better. Even in the GDP numbers, the services growth has been much, much better. And we are seeing now strong order books across all the sectors. So there is no reduction in any demand due to inflation as has been seen till now, and especially from the PMI numbers, because otherwise there would have been some dip. So the point is stay invested. Now let's talk about Zomato. I found it very interesting. It posted a profit for the first time at the net level. Now it had the point to note in their results was that it had 70% growth in revenue. But the other point is that their PE investor Tiger Global completely exited from Zomato. Now, the Q1 food delivery business performed well, but the delivery business, that is quick delivery business of Blinkit, is suffering losses. Now, problem is that in their overall revenues, there is increasing contribution of loss-making businesses of this quick delivery than of food delivery. Hence, you can do some bit of profit here and there, but that is a concern. So what it comes out is that acquisition of Blinkit was unnecessary as it has though provided top line growth, but it is at the cost of profitability. So that is the point to be kept in mind for Zomato. Now we had an interesting case of Gokaldas exports. They took the Africa route to sidestep US duties. Now the point here to understand is Gokaldas Exports acquired Atraco Group. Now, Atraco has four manufacturing units in Kenya and one in Ethiopia. Kenya has a duty-free access to US, world's largest retail apparel market. Exports from India currently attract 11 to 28% import duty to US and 12% to UK and UAE. So, if there is no duty, hence the cost will be lesser, hence they will margins will improve, and the cost of labor is one fifth in Kenya as compared to India. So the expectation is that in case the present revenues are around uh, 2,222 crores, so the revenues are likely to exceed around 3,500 crores in 2 years, and that was the issue on which the stock goes up. But the interesting part was, if you see here, on 28th or 29th of August, this news came out. The stock had a gap up, 20% upper circuit. Second day again, 20% upper circuit, and now it is selling. So the buying on the news or on this kind of euphoria is very difficult because there are a lot of other issues to be kept in mind. So if you get it, you have to get it on the dips to retracement to some moving average. That was the point about Gokaldas exports. Now the other point is this has been highlighted by Bajaj Finance, the biggest NBFC, that there is a risk in profitability as they are trying to give more and more unsecured loans. All these NBFCs. So the unsecured lending has risen to 18% from 12% as on date, and Bajaj Finance warned that repayment depends on income growth and real wages going up, which are actually flat since the pandemic. Hence, one has to be careful with the NBFCs because if they're not going to get their loans back or the lending they have done, then the risk is on their profits and there would be higher NPS. Now coming to the technical setup, this is if you see uh, Nifty's 1 month chart. Now everybody knew that August is going to be tentative, and it was actually tentative only. In August, if you see this 1 month chart, after four successive green candles, we had a red candle, and August we had a low. I'll show you that. Now September is looking green here because just 1 day of trading, but we had a, red candle after four green candles. Now if you see Nifty daily chart, now this is the declining trend line. Now this from here the Nifty took support, and also it is commensurate to the base of this green candle with the four green candles which we had in June end. Now it corresponds to that. So that level of 240 250 has been defended. Hence this low becomes important. I'll show you again. Now if you see the Nifty again 1 day chart, you see this low. This low has been defended and we have bounced from here. So we have to keep this thing in mind. Though Nifty has now gone up above the 50 EMA and it has crossed the 20 EMA, so we have to see that whether this continuity goes up. So if it goes above, remains trades above the 20 EMA, then it is likely to go to the fresh highs or maybe retest the last high. Now the hourly chart I showed, it was very clear that this base of around 220, 230, 240 has been defended number of times by the Nifty, and then it bounced from there. So it bounced, it took support from the declining trend line, and the green candles, if you see, they bounced from there. So till now, this has been defended, and this becomes an important support. So for the bulls to retain hold, this low should not be violated decisively. But if you really see, as I had shown here, if this gets violated, then the next level is the 100 EMA of 18131. So that becomes critical because then, sorry, 100 EMA of 18948. Sorry. So that becomes critical. But if you see, what I wanted to show here was that on there was a low which we had made on this trend line on 26th June, right? So till the time this low is not violated, right, of 186248.2, then it is okay. So we have to be careful about this because this low which we made on 26th June, uh, the chances of it getting retested, because this was the swing low. We had a swing from here to this point and then again. So this is the swing low. So this, if gets retested, then that should provide the support. Now the point here is uh, there are no event triggers that may propel the market higher. Uh, there is a special parliament session from September 18th, That would lead to some more uncertainty, and at such times, market prefer to be defensive. Hence, I don't expect any big move in the first half of the September because there is uncertainty related to those issues. So, as I brought out, that testing of the swing low of June 26 of 18650 is pretty high. Now, let's talk about Bank Nifty. Now, this one is a weaker chart. If you see, it is now taken support at 100 DM, right? So the 100 43,930 is the level at which it is at taken support, and then it bounced back. So it is between the 100 and 50-day moving averages, and though it is not gone below the declining trend line. Now the point is the corresponding level of 26 June, where there was a swing low for Nifty. Now for Bank Nifty is not very far. So it is around 43, 300, 400 levels. So that is not very far. So trying testing of this low is not very difficult. So this may get tested. So watch out for this level of 43,500 for Bank Nifty. But the action in the broader markets continues. So if you see, this is Nifty 500 1 month chart. From the rising trend line, there was a breakout, and then we had these four green candles, and it is still above the breakout level. So the broader markets are still looking strong, though the August monthly green candle was red, but now it is looking strong. So there is a hope till the time the wider market is strong. Now let's see the midcap index. There is no break here, right? It took support from 20 EMA on the monthly charts, and then we have seen one, two, three, four, five, six green candles now. So it is looking strong, and similarly in the small cap index, same. So these are the two indices which are at all-time high and looking very strong. So if they, it shows that the small and mid cap are strong, that means the traders are happy, and large part of the market is not focusing now on the main indices. And but if you really see, for this is a 1 monthly chart, these small cap index, went up like in 2007 rally, then it corrected, then it went up, then corrected, then in 2014 the rally started, went up, corrected in 2017, then after the COVID thing it went up. So once it starts moving, it has a sizable move, but it falls once it corrects. It goes down to either 20 EMA or 50 EMA. So the fall will also be pretty strong once it starts correcting. Now there is very interesting thing I found. This is worth getting into. There is a BSE Momentum Index. This is a monthly chart of BSE Momentum Index. Now, if you see again here, it has a consistent move for last 6 months, and the trend is up, and it has not broken this trend line. So it is not looking weak or something like that. So this is a strong stock. Now let's see which are the stocks in this BSE Momentum Index. All these stocks, you can read the names very carefully. These are all the stocks which are in good trend and poised for breakout. This is a group of 30 stocks in BSE Momentum Index. And if you see, this is of Friday's performance. All of them are in this market are doing well, and safer stock to be invested with. Not even one I found was a weak stock, and they are coming back. So if the broader market pushes upward, it should support the upward action of Nifty, and hence all the dips should be a buying opportunity. So that is why I said don't worry, be happy. Now the IT index I wanted to highlight, it was stuck in this range. It took support at its base, and now it is likely to break out from this level at which it has turned number of times. So this IT index is looking very strong. Hence, once it breaks out from here, then then there is a possibility of it going to 36,000 and above. So it is already at 52-week high, the IT index. So IT index or the stocks are the ones which have to be looked at. Now let's talk about the stock which I'm going to discuss in detail today. Now I found literally I was kicking myself that I didn't do adequate study and I sold off Apar Industries uh, when I found there was too much of a movement. So let's first discuss the Apar Industry. It has three broad business segments, which are conductors, transformers, and specialty oils, and power and telecom cables. It is the largest exporter of conductors from India. It is a pioneer in transformer oils in India, 60% market share in power transformer oil and 40% in distribution transformer oil in India. They are largest exporters of cables from India in financial year 23. Segment-wise revenue for FY23 is conductors 47%, specialty oils and lubricants combined around 31%, and cables 22%. And outlook over the medium term remains strong due to healthy demand and aggressive capex globally for renewable energy capacity addition, transmission expansion, infrastructure development, public transportation, and telecom push, coupled with the theme of China Plus One. So, if you see the key themes of renewables, electrification, decarbonization, and infra spending, and China Plus One and 5G rollout, all will translate into a strong opportunity for this stock for 5 to 10 years. There is a strong tailwind for conductors, both in India and overseas, and to cut out the transmission losses, even Power Grid is recommending to change the old conductors with high efficiency conductors where only these people make them. Specialty oil and lubricants are the basic consumables which anybody would know are required for manufacturing sector. And higher the utilization of machinery, greater is the manufacturing, leads to more wear and tear of equipment. Hence, there is more requirement of specialty oil and lubricants. It's a market leader in specialty cables also. Just for information, 98% of the cables and wires for the Vande Bharat trains are supplied by Apar. Now let's see their quarterly revenues or the profit and loss account. The revenues are constantly going up. They have always a lumpy quarter in March. So there is a good revenue growth. Operating margins are now going up. They have come to around double digit, around 10%. Profits are going up, and even earnings per share is going up. So let's see this chart. So if you see, some estimate is that their adjusted EPS for FY25 may be 200 rupees. So if it is 200, and if you give it a, a PE of around 25 or so, then it is at fair level. Now it is at 5,000. But if you think of giving it higher P, maybe trades at around 30 odd, so then it can go to 6,000 very easily. And we start discounting the next year earnings this year. So the PE has been declining, so it is becoming cheaper. There is a business transformation. The ROCE, ROE, etc. are good. The profitability margins have improved, and the other ratios are also good. The debt is under control, it's nothing, and the interest rate coverage ratio is good. And if you see, it is in competition with Polycab, KEI, Havells, Finolex, Apar, Universal, and others, KEC, etc. So their growth is much higher than, and CAGR growth year on year, and otherwise is much higher than the rest. So so if we find that Polycab or KEI are become expensive and all, so you have an opportunity with Apar. That is the point, and they have multiple businesses. Now let's see the chart. It had a vertical rise here, and so this was a level where I just exited, but now I realized that it was stupid. So this is the right now it is consolidating. So, in case you get a dip, this is a good stock to accumulate. Next stock, again, it's very interesting. Again, as I was discussing, we missed lot of opportunities. This was one opportunities which I think I missed. This is in the business of manufacturing steel wire, wire ropes, strands, and slings. They have a capability to manufacture wire ropes ranging from 6 meter to 90 millimeter, 6 millimeter to 90 millimeter, and steel wire ranges from 0.3 millimeter to 5.5 millimeter. They have a strong presence in international market. 83% of the revenue is from exports. Volume growth is expected to be 15 to 20% year on year for the next 3 years, with capacity utilization reaching 80 to 85% from 62% at present. There is a healthy demand for its products in global and domestic markets, led by buoyant capex outlook in infra industrials and growing replacement demand. Revenue, EBITDA, and profit after tax are likely to grow at 15, 26, and 47%. Uh, Hence, CAGR growth over next 2 years or so. So it's a good stock to be kept in mind. Application is across industries, including elevators, shipping, oil and gas, cranes, mining, etc. So as we have seen, 83% of the revenues are from exports, but they are trying to grow the domestic revenues also. So if you see their FY23 results, the revenue grew by 43% year on year, EBITDA by 123%, and PAT by 4.5 times year on year. And the healthy capex cycle in the domestic market will help grow the business. Now let's see their quarterly results. Again, you see there is a constant improvement, and they have restructured the company from a loss-making company. They have become a net profit company. Operating margins have improved now to 28, 26%. Profits are improving, and EPS is also improving. So if you really see, uh, their revenues grew around 31% CAGR over the last 3 years, EBITDA 68, and this has nearly become 4.5 times the profits. So the whole earning thing is changing. ROE, ROC is improved, and what is expected is 2 years CAGR around 15% for revenue, 25% for EBITDA, and 47% for 47 this thing for profits, net profits. Now the point is that once their revenue grow, now you see their EPS. EPS is expected to be around 20, 20 in FY25. So even if you give it a P of around 15 to 20, it can easily trade between 300 to 400. Now see the chart of Bharat via ropes. It gave an entry here at around when it dipped to its 50 EMA to around 200 rupees, and this is where we missed it. And now it had a big green candle. So just wait for some correction in case this thing. Otherwise, you can look at this for investment purpose. The next stock is TD Power Systems. It is engaged in manufacturing AC generators and electric motors for various applications. Top customers include various OEMs of turbines such as Siemens, White Hydro, General Electric, and Triveni Turbine. So this is the point I'm talking about. We are only looking at one stock in the sector, that is Siemens or Triveni Turbine as such. But who all are providing them have given more opportunity in terms of diversifying your portfolio. So they have guided for a revenue CAGR of around 17 to 18% over the next 2 3 years, and margin to sustain at current level of 17%. Order pipeline in hydro is strong, and company targets to double the order inflow in the current year. Recent railways motor order worth 750 crore is likely to see execution over the next 4 5 years. Again, like I was just wanting to point out, we are looking at railway stocks, and nobody talks about this. Current capacity utilization is 70%. Management has announced capex of 120 crore in a phased manner. Capex is likely to lead to incremental revenue of 400 to 500 crores. Order backlog is around 1390 crores, so that's a decent order book. And there is a lot of inquiries across hydro, steam, and gas sectors. So this TD Power System expects orders worth 50 to 60 crore from Alstom, which has got an order for making the Train 18 aluminum frames for 100 train. Train 18 is nothing other than the Vande Bharat Express. So it's a basically a beneficiary of industrial capex and rising demand for captive power. See, every industry who is setting up, they require captive power because nobody wants to be dependent on anybody else. Otherwise, your workflow stops. So if you see the present revenues, say present revenues are around yearly revenue around 800 crores, 800 to 850 crores. So this is expected to in 2 years this is expected to double to 1700 or 1800 crores. And if you see the margins have also improved drastically. Even in a year, the margins have improved by 400 basis points. If you see the results, the profits are going up, and it's a stock which is doing well. So if you see the financial summary, this is in millions of rupees, so you can take it as 872.3 crores. So if you see, there is an improvement of EBITDA margins. The PE has come down. ROC is improving, ROEs are also improving. And this is their order breakup or order book in FY24. So if you see, the major chunk of orders are from railways, then domestic industry, exports, etc., and small projects and other issues. So the stocks to be kept in mind. Now let's see their chart. Now this one, it's just hugging the 20 EMA. Hence, it provides a decent opportunity. The moment it comes on a bad day, comes closer to this, so you can look at it and then hold it for 3 to 5 years because the business is doing decently right now. So this was the market talk today. Now we'll take questions. Thank you. Yeah, please. Questions, please.
Hi, Tarun.
Yes.
Is Nifty, you see, going up again? I think it is bottom. My view, like in case the views are
Yeah.
negative, then it is bottoming out. In case people are thinking that it will go down further, so it may be bottoming out. So what is your sense?
My
We
view
should
is
buy from
my
here.
my view is very simple. My view is that at least in September, we will it will not do much.